Firstly, we would be going to Screener. Then you have to log in into Screener. So I have already logged in, and then you can type the company that you want to analyze. So just the short note that this video is purely for educational purpose only, and it is not an investment recommendation. So today we would be looking into, let's say, Bajaj Finance. So now here is the complete details of Bajaj Finance that we have. So if you want to read about the company, you can read like the Bajaj Finance is one of the among largest NBFCs in India. The company is one of the leading and the most diversified financial services companies. And these are the products: consumer lending, SME lending, rural lending, commercial lending. And these are the key metrics is also written here. This is the asset under management of Bajaj Finance and subsidiaries. So all those details are already present in the right side of the section. And here are all the different type of metrics. So this is market capitalization, current price, the book value, the return on capital employed, which basically suggests that how efficiently the company is generating revenue from the capital that they have deployed. And this is return on equity, how much the profit the company is generating from the money that the shareholders are invested. The higher the better in both the scenario. And this is the face value. The face value is 1. And promoter holding 54.7% is the promoter holding, and financial institutional investors have hold around 21.3%. Domestic investors are holding around 15.1%, institutional investors, and the public is around holding around 8.73%. So all these are the different financial metrics. So here is a price chart. So here we can see that the yellow line represents the 15-day moving average, and the black line represents a 200-day moving average. And this is the price that has been trading on NSE as per. So currently it is above 50-day moving average, but below the 200-day moving average. So yeah. So secondly, and this is one of the most interesting section because they basically give you a snapshot of the companies. So this is the company has delivered a good profit of around 34.1% CAGR over the last 5 years. They have been maintaining a healthy dividend payout of 18.6%, and the median sale growth is around 29.4% over the last 10 years. Some of the negative downsides of the company is that the stock is trading off around 5.11 times of the book value. The company has low interest coverage ratio. The company might be capitalizing the interest cost. So now we move on to the peer comparison. So these are all the different types of the companies which are in similar industry as the Bajaj Finance. So here we can compare it with the price to earnings ratio. So the price to earnings ratio. So this is the median price to earning ratio. So if the company's price to earning ratio is more than that of the median, that suggests that the company is overvalued, or maybe it may be a case that the investors are basically optimistic on the future growth of the company. So this we can also see the dividend yields of the company, that the company that are giving dividends and not. So now we move on to the quarterly results. So every quarter the company publish their results. So we can see the data is here is from the March to 2023 to March 2026. So now we move on to the revenue. So there is an increasing trend in the revenue. We can see that the revenue has been constantly increasing every quarter. Now we can also go to the detailed analysis of the revenue. This is year-on-year sales growth is around 27%, 22%, 21, 18, 16, 18%. Now interest income is around 7398 crore of the last of the March 2026 as per. Now the expenses, these are the employee cost that the company is bearing, is around 11.44%. And this is the financial profit as per the quarterly results. Then is the financial margin and other income. If you want to go to another income, there is a there is one is a negative other income, which is an exceptional item. And other income is also there. Now the depreciation is there. Now the profit before tax, same increasing trend, just a slight decrease in, I guess, in December 2025, but which has been recovered substantially. Same trend we can see from the net profit as well. Now the EPS is around 5.22 in the March 23, and then similarly there has been increasing trend in EPS as well. Gross non-performing assets, NPAs is basically refers to non-performing assets. So these are around 1.01%, which is probably a good scenario that suggests that the company is recovering of all the loans and advances that they have lent out to the people, that they are easily recovering it. Now we move on to the profit and loss scenario. Now here we can see the revenues. Now same, we can see the trends. The revenue is also increasing every year on year. Now interest income is also increasing. Now the expenses, manufacturing cost, here is the bifurcation of the expenses, is manufacturing cost, employee cost, other costs as well. Now the financial profit, same increasing trend. So this basically suggests that it is a good company as per se, because the trends are increasing, the company is growing every year on year. So now these are the other income from exceptional items, and then this is profit before tax, same increasing trends and tax percentage. Now the net profit is also increasing year on year. So as per of the March 2026, they have 19,332 crore profit. Now the EPS, here we can see the EPS. Now dividend payout. So this is what I like about the companies. I basically like dividend payout companies. So the companies every year on year, they have at least provided some dividend. Now as per the latest, they have provided 20% of the dividend. Now we move on to balance sheet. So balance sheet, the data is from the March 2015. And now the equity capital, the company has been raised equity capital substantially last year, which is in March 2026. Now the reserve has also been increasing. However, borrowings are also increasing year on year. Just a short note that the borrowing in this case is higher than that of the reserves, as because the business model is built on leverage. That as the company is non-banking financial corporate, so that is why the borrowing is higher than that of the reserves. But however, if the company is not an NBFC, then this might suggest a negative scenario. The total liabilities is also increasing. Now fixed assets, now we can also see the bifurcation of fixed assets like land, building, equipment, gross block. I see other investments, other assets, total assets. Now we move on to the cash flow. Now here comes the most interesting part. So cash flow from operating activities. So same scenario, as this is negative, as because the business model is built on leverage. The company is constantly lending out its assets and loans and advances, and that is why the cash flow from operating activity is negative in this scenario. Now the receivables are also negative. The loans and advances, see here we can see the trends. The company is lending out the loans. Working capital changes, interest paid, direct exceptional cash flow items. Now it's cash flow from investing activities, the investment purchase that the company has heavily invested around. The investment sold, they have also been selling the investments. Investment received, dividends received. Yes. Now we move on to cash from financial activities, proceeds from share. So this is the cash that is coming in, the proceeds from borrowing. Now repayment of the borrowing, company is also repayment its debt. Now dividends paid, it basically refers to the dividends paid to the shareholders. So as per the latest, they are paying around 3477 crores of dividends. Financial liability, share application, and net cash flow. Now here is the ratio which says that the return on equity percentage. So the company has a decent return on equity percentage. There is a slight fall on March 2021, which we can obviously understand as because of the COVID-like scenario. However, otherwise the dividend return on equity is decent, pretty decent. Now there is also shareholding pattern. So we can see the promoter is holding around 54.27% latest, then financial institutional investors are 21.33%. Now we can also check who has invested, like government of Singapore. Now domestic institutional investors, we can also check which of the domestic institutional investors have invested, like SBI Equity Mutual Fund, SBI Mutual Fund, LIC India, Axis Mutual Fund, etc. Now public, now here is the public, 8.73 has been given to the public. Now this is the total number of the shareholders as per the latest data. Now one more scenario that I would like to tell you guys is that here every quarter a con call happens. So what we can do is we can go to this PPT, we can download this file. Yes. So after downloading this file, now I would be showing you how to analyze this file. Instead of going through the whole document, how we can quickly analyze it through the help of AI. Now what we will do, we will be going to Claude. Now sign into Claude. Now I have already signed in. Now we will be taking that file. Hopefully the file has been downloaded. Yes. Now we would attach that file here. Now we'll be writing a prompt and graphically present the pros and graphically present the document attached, state the pros and cons of the company, and also from investors perspective suggest whether it is a good buy or someone should avoid investing in the company. Suggest 3 reasons. So now we have entered our prompt, and now we are waiting for the response now. So now this is the final result that the Claude has basically done. So here is the asset under management. They have given a snapshot of all the important metric here. This is asset under management growth, which is we can see the increasing trend here. This is profitability trend. This is asset under management segment mix, key ratios and versus guidance. And also this is the most convenient part, because instead of going through the whole PPT, you can straight away just read the snapshot that the AI has provided, which is asset under management crossed the 5 lakhs crore milestone, which is a positive, but however home growth 22%, missed own guidance of 24 to 25%, and MSME non-performing assets are still elevated at 2.65%. Risk first, it basically curbs growth. Now investment verdicts, so they have also given an investment verdict, which is a structurally sound compounder with the near-term execution watch points. So these are all the points that they have been provided, whether we should invest or not, why consider buying. These are the 3 reasons as we entered in our prompt, why to be cautious. Also they have provided 3 reasons: because the valuation premium is high, MSME stress not fully resolved, and growth guidance track record. And finally they are given the verdict, which is the bull case scenario, bear case scenario that you should take into consideration. And the bottom line for investor, Bajaj Finance is a high quality business, not a value trap, but it's not a stock to chase at elevated multiples. So it's a better entry would be at the broader market correction. Just remember that this is purely for learning purpose only. The company that we have picked today is total from the learning perspective, so that you can learn how to analyze the stock with the help of the tools like Screener, and also with the help of an AI, how you can efficiently analyze a con calls PPT. So here we have used Claude. So this is the total snapshot for today's video. Thank you.